Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:14 in the a.m. Eastern Standard Time. Let's begin with the economic data that was released yesterday, and we'll swing then over into the economic data that is set to be released this morning. Yesterday morning, we were looking at the PPI index, which came out hotter than expected. That means that inflation rose hotter at the producer level. What did the U.S. dollar do? It shot up higher. Go figure. Now, this morning, we have the CPI coming out. That's the Consumer Price Index. And that will reveal inflation at the consumer level for the month of August. And I have to bring this up because it's just a thumb in your eye to anyone with half a brain. At 2 p.m., we get the federal budget. Think about that. Ask yourself the question, with the deficits that we run and with the ridiculous showmanship that gets put on in Congress and with the White House, with not just President Trump, but with Obama and Bush before him, the kicking of the can down the road of fiscal responsibility, but they avoid that by using fear vis-a-vis shutting down the government. We go through that every 6 months or so. Of the government threatening to get shut down. Please shut it down. Let's move on to the news items of the morning. Okay, so to this morning's headlines, we have Trump delays increase in China tariffs until October the 15th, futures surge. Now, this was pure genius. Why? It's because the markets closed out the day at the highs yesterday. Very strong day. And then what did President Trump do? Right before or right at the open of Asian trade, he comes out with this announcement. And in all probability, this is going to send the markets into new all-time highs. Assuming that the CPI data doesn't come out really, really hot and that retail sales don't plunge. And I'm concerned about retail sales because August spending plunged really, really bad. That was announced yesterday. But right now, these are the two top headlines. The markets want a bit of certainty. So if the president can take the trade wars and put it on a back burner, leaving a glimmer of hope at the end of the tunnel, that'll satisfy the markets as noted by yesterday's price action and this morning's futures action. We'll go to that in a moment. Add to that the renewed attacks by the president on the Federal Reserve. The president is now demanding, this is the first time ever, now demanding 0 or less so we can refinance our debt and lengthen maturities. What he wants, and this is really scary stuff, we want forever bonds, 50 and 100-year maturity on our debt to refinance. Now, on the face of it, it sounds like a good deal. But does anyone believe that the federal government, if they're able to refinance their debt, our debt, I should say, will they cut spending? Absolutely not. They are going to ramp up spending like you have never, ever seen before. And when interest rates go to 0, watch out for that giant sucking sound of money coming out of your savings account. You got to get money out of the banks because it will be called a quote-unquote bail-in. You'll be bailing out the banks when you think you're saving money. It's not going to be the federal government with our tax dollars coming to save the banks. It's going to be the depositor. More to come on this one. Let's get to the charts. Okay, we'll kick things off with the S&P futures market. We are up above the 3,000 mark this morning. We were a bit higher. This is a 4-hour chart. These will all be 4-hour charts. Oh, and did I ask you, please hit that like button. Please, I beg of you, share with a friend. It helps me out. And leave a comment below, or if you have any questions, let me know. And in fact, I have been asked, because I brought it up once before, will I be doing live streams on YouTube? I want to. I want to know first whether or not there is an interest. I don't want to put up a live stream and then have nobody show up. So and that's honestly, I'm sure the people will show up, but I guess I am a bit fearful about that. So I'm thinking about Sunday evenings. It'll be interactive. If you're interested in it, please let me know. We'll take some questions, maybe do some stock chart reviews, especially from members out there. We'll do that live. And let me know in the comments below if that's something that you'd be interested in. All right, back to the charts. S&P futures, we are up over the 3,000 mark. It's a flat morning. We're off the highs of the session. I think the real story is over on the NASDAQ, which is up over 1/3 of a percentage point. And yes, we have pulled back off the highs of the session, but still a respectable morning. Now, as for the US dollar, the dollar is under a lot of pressure. Because remember, yesterday we had the PPI come out. That's inflation at the producer level. But the dollar skyrocketed. Counterintuitive, no? So while the technicals were no shock to see the dollar rally, the fundamental reason as to why the dollar would rally just didn't make sense, especially with the olive branches being extended by both the president and the Chinese, because traditionally when things get ratcheted up in terms of tension, money flows into the US dollar, and tensions was certainly reduced yesterday, yet money still floated into the dollar. So something just doesn't make sense there. So the dollar's pulling back, which does make sense. And that bodes well for gold. Gold is up this morning over a 0.5 percentage point. We are long of the gold mining stocks. We're long of the NUGT. We sold calls yesterday, the 40 strike expiring last week. I said last night on Market Wrap with members that we're up around 50% on that trade. The actual figure, I want to be accurate, we were up slightly over 44% on that trade as of this morning. And I'll probably close out the position this morning. We'll scalp those profits and we'll look to resell if we get a continuation move higher on the NUGT. So members, more to come on our hedging of that position. So while gold is looking good on a 4-hour basis, we have broken out. We have pulled back. We did retest, consolidated. Now we have broken out above this resistance level here. We've respected the 1,500 mark. We've retested it. I think that in the short term anyway, that gold has probably, in air quotes, probably seen a bottom. And it just goes to show you that the reason why gold has been rallying is not because of the Chinese trade tensions. It's because of our fiscal irresponsibility. Because if gold was rallying because of the Chinese trade tensions and a flight to safety, then why would gold be rallying this morning and the dollar pulling back? Think about it. So gold looking good. Let's take a look at silver. Silver had an outside reversal day yesterday, and I didn't talk about it last night with members, and I forgot to. But I will bring it up now, because we are looking to open up a long trade on silver. And yesterday morning, I warned about this, was that we were looking at a potential head and shoulders setup, but I was still bullish. Now, my bullishness, as long as we didn't break this neckline, would increase the longer we extended out this consolidation from the head, because the probability of a breakdown becomes less and less likely, because the longer the consolidation, the greater the validation of any breakout higher, because the path of least resistance is to the upside. Now, you could see that yesterday we broke out above this upper band of resistance, and we have a continuation move higher today. We're pulling back this 4-hour bar here, which opened up at 5 a.m., but it doesn't close until 9 a.m., and that's still a few hours away from closing out. So we may move higher from here. So silver looking good. Bitcoin remains in the consolidation. Not much to talk about here. I wouldn't buy it. I wouldn't sell it. We'll leave off with oil, because oil took it on the chin yesterday. We'll go with light sweet. And wow, it is getting hit again today. Down over a 0.5 percentage point. So we have, on a short-term basis anyway, using a 4-hour chart, we have a lower high and a breakdown below to make a new lower low. So you're going to see pressure today, if this continues, pressure today on the energy sector and on the frackers. So at current, the path of least resistance on a 4-hour basis is to the downside, and we are flirting with a breakdown to a new 4-hour bar low versus the prior 4-hour bar. We'll have support at around 54.79 on light sweet crude. Okay, folks, let's segue over and into the... By the way, did you click the like button? Please click the like button. If you would please do that, I would appreciate it. Share with a friend. Thank you very much. I apologize for the head fake. Now, let's segue over and into the stocks that we're watching, as well as the symbols that our members submitted for me to review. The first one up is MasterCard. This has been a symbol that has been requested by one of our members before. This is a daily chart, and you can see that we've had a heck of a sell-off here, but this really doesn't tell the story of what's going on with these shares. What you really need to do is take a look at a weekly chart, but before we do that, let's talk about volume. Volume is big. This is institutional distribution. This cannot be ignored. So what we need to do now, after also commenting on the fact that we closed down below the 20-period and the 50-day moving averages, that's a problem. Now, segueing over to the weekly chart, we are retesting the lower band of the rising uptrend channel. Now, this is Thursday morning. We have 2 trading days left to go. A lot can happen here. However, I must point out one thing, and one thing that you really need to pay attention to if you are bullish on these shares. We have a breakout point failure, also known as a bull trap, meaning we broke out last week only to fail this week to break down below key support. Now, if we rally back by the end of business on Friday to close back above the support level, well then, no harm, no foul. That's just a signal that we have buyers below willing to bid the shares up higher, and it means it's off to the races for MasterCard. However, given the data that's been released of late, where the level of credit card debt being held by the American consumer is at all-time highs by a long shot, well beyond the 2008 levels. You have auto delinquencies rising, home prices under pressure, and you also have short-term rates rising. So be careful here. Be very, very careful. I would avoid. And it could quite possibly, in the next couple of weeks, become a short. Okay, now for Alphabet, Google. This is a monthly chart, and we spoke about this on yesterday's Swing Trading Today, where we had the monthly chart looking rock solid. Now, I mentioned that we were short, not a big position. It's a $1,200 stock, for God's sakes. It's not a big position. We were looking rock solid, but my concern was, daily chart, my concern was the antitrust action being leveled on Google, and we went short on that news, and the market is saying that we were wrong. We were wrong. The shares broke out on Wednesday. RSI hooking up, volume dropped off, but still, we have a breakout. We can't ignore the facts. The market is sending us a signal. So you need to take your ego, check it at the door, and say, I was wrong. I'll be right at some point in time in the future, because the markets or an individual stock can stay irrational longer than you could stay solvent. So we live to play another day. We will look to take a loss here, and in all probability, on a retest of this breakout point, look to open up a long position using options, because this is a speculation. I don't like the headline risk here. And you may be saying, Bob, the headlines are already out there. They're being sued. If it didn't go down now, when will they go down? Well, when you're in discovery mode, meaning the state's attorneys general go into discovery mode requesting emails, memos, whatever, and they begin to leak them to the press, all the nefarious stuff that may or may not have gone on, that is bad stuff. And that's the next level, not necessarily the lawsuit. We kind of knew that was coming anyway, but the perfect storm was the fact that the markets are rallying and they're taking Google along with it. Baidu, Loving the breakout here. I mentioned this yesterday that we would probably see a breakout. We got the breakout. I would love to get a retest of the breakout point. I would be looking to buy these shares fairly soon. Members, I'll be sending out an alert on this one if and when we do buy the shares. We have a breakout on RSI. Volume, another good day yesterday of above average volume. Stokes, a breakout. There's nothing not to like here. DPST, this is the regional bank leveraged ETF. We spoke about this one as well. We have new higher highs. You still can't buy it though. It's overbought relative to its third standard deviation Bollinger Band. We're going to get a pullback. Look at these Stokes. Stokes are at 91.13. You don't think we're going to get a pullback? We're getting a pullback. Don't get emotional. Don't worry about the FOMO, that feeling you get, the fear of missing out. It's the worst possible feeling because you will buy at the wrong time. And if you're on margin, bad stuff. MD Resources, another daily high and another breakout. This is another one where we're going to get a pullback. Why? Because we're leaning into the third standard deviation Bollinger Band. You hear me talking about this all the time, but you need to realize this is reality. We're not supposed to be up here. And I don't mean in terms of price. I mean in terms of momentum. The price action within the rolling 20-period moving average, this is unsustainable. Now, that doesn't mean that it can't go higher today. It just very well may. But I wouldn't be the least bit surprised to see a bearish reversal day and a pullback and a retest of the breakout point right here, $28 a share. Love it. How is our volume? Men's and men's, on average. Good stuff. MACD histogram still rising. I think we're going to get another daily high, but I can't buy it right now. I need to get the pullback. Las Vegas Sands. I still don't like consumer discretionary. You're seeing MasterCard get clobbered. Why would I want to buy a casino when nobody's got any money? So I think that this is a short covering rally, and I would not be a buyer. Talk to me when we break out above this upper band of resistance. That means that there's underlying strength in this economy, and people are spending, but not for nothing. August retail sales, the lowest in a very, very long time. Maybe they spent it at Las Vegas Sands. Not quite sure. But I would avoid this. It doesn't mean it can't move higher. It just means it's out of our wheelhouse. I don't feel comfortable with it. Tesla. We were bullish on Tesla a couple of weeks ago. We finally got the breakout here on the 9th. Retest on the 10th. Yesterday, continuation breakout. We'll pull back, buy the pullback. Stokes are very overbought at 90.14. Wait for that pullback and a hook back up. Members, we'll be talking more about Tesla and these other names that I like on Market Wrap tonight when we do a deep dive during our strategy session of when we want to get long of these names. Right now, you can't. All I can speak to with non-members is this. Avoid risk. I'm telling you right now, there's too much risk to go buying these shares, even if we make a new daily high. We're going to get a pullback. If you're an investor and you know something different than everybody else, then go for it. Do what you got to do. But if you're a trader, now is not the time to buy. The time to buy was here on the 10th. Since that point in time, we're up 5%. Aurora Cannabis. I'm liking the setup here. We have a breakout on RSI. Stokes are extended, but not too bad. And we broke out yesterday on a bullish key reversal. Volume, outstanding. So Aurora is another one that we'll be watching as a potential long trade. And that is it for this morning, folks. Please, if you haven't already done so, do me a favor. Give me a like, share with a friend, leave a comment below. I'll definitely get back to you if you have a question. There are no stupid questions. I love constructive feedback too. If I could do something different, please share it with me. I'll give you a thumbs up. Other than that, everybody have a really profitable trading day, and I'll talk to you soon.